Okay, Anupam Tiwari of Access AMC now joins us to take the show forward. Let's talk market sectors and themes. Anupam, good morning. Thank you for joining us. Anupam, if I look at the market right now, the non-banking part is doing much better than the banking part. The reason why non-banking part is doing better is because everybody is optimistic of recovery. If everybody is optimistic about recovery and liquidity, then why the banking end of the market is suffering? Because if economy indeed is on a recovery course, then banks should be the first one to recover. And if banks are suffering because everybody is bothered about the economy, then the other part of the market should also not recover.
Okay, so what you need to look at it is how people are perceiving flow versus stock information. So everything else is recovering because there is a visible information, tangible, quantifiable data that there is a recovery in demand. And we can see it in commentary of companies, we can see in data points, etc., etc. Now, the worry with banking is that, yes, there is recovery. So, of course, incremental business will be positive. But what happens to the stock or the loans that were already in the books? How much NPA is there and how much losses banks need to book on that book? So from that perspective, I think in 1 or 2 quarters, situation would be much more clearer. What we are hearing from our ground level work and engagement with companies, various participants, that recovery is also there in banking sector. It's not that the moratorium part or the NPS part is going downhill. In fact, in certain companies have commented that situation is better than expected. So I'm sure over a period of time, as more information becomes available, there would be recovery in banking also. However, one has to be cognizant of the fact that the recovery may not be uniform and it would be very specific to companies and banks, NBFCs, which actually demonstrate that they are better off than others and they have better recovery process, better recovery systems and better customers to start with.
How are you investing in this market? How has the core of your portfolio changed, let's say, before March and post-March?
See, not materially. We have a kind of a defined philosophy how we need to construct our portfolio, which is basically buy good companies run by good people. So good companies are good businesses. How we define it is companies which have good cash flows, good ROE, ROC, which are strong, which are kind of dominant players in their respective sectors. Because we believe always that good times are bad times. It is the strongest who is going to win and keep on gaining market share. And secondly, we look for good management track record, their execution skill set, and their corporate governance. So we continue to do that. And of course, given what has happened in the last 2-3 months, where we see that our portfolio may have a slightly delayed recovery, or there could be chances of earning downgrades and prices don't support that. So we have kind of eliminated them or reduced them and added where we see chances of upgrades.
Okay, fair enough. Just want to also sort of talk to you a little bit about, small caps. There has been more interest today in terms of whether or not it's the right time to perhaps get into that segment of the market, since we are seeing that FOMO effect playing out. Do you feel that timing-wise, perhaps investors can look at this now and, also what perhaps they should keep in mind while looking at a small cap fund?
Okay, so let me start with first part, as I understand, is that why one should look at small caps in India at all, and then look at whether timing is right or not. So we will deal with this question in 2 separate parts. So if you look at why we have not been able to create significant wealth in small cap in last 5-10 years historically is slightly a kind of a wrong notion, because small cap index per se is a residual thing. All good companies move on to become mid cap and large cap. So what you are looking at is always which are smaller companies getting into index and good companies becoming large, moving into mid cap index. So if you look at in entirety, it's not that a small cap has not created wealth in India. Now, second thing is, what are the great challenges that have been historically for small companies in India? So I would, in my opinion, classify them in three parts: access to capital, access to talent, and access to market. These are the biggest challenges for small cap companies in India, or let's say any small company in India. Now, slowly, as economy is growing, as we are maturing, we are solving all these three problems. So if you look at one of the biggest problem is access to talent. Generally, people prefer at least the good talent, and the best part of the talent wants to work with larger companies because they feel more secure, they feel they can deliver better, and they can create better wealth for themselves. Slowly it is changing. As small companies are creating more wealth through ESOPs, etc., companies are becoming more professional, giving more freedom to managers. That thing is changing. And we have seen a lot of talent moving from very large companies to pretty small companies and trying to make a difference and try to do better things and deliver better things. And that's a very good thing, because eventually to grow, you need good talent. And in my personal opinion, that is one of the biggest hindrance for small companies in India. The second thing is access to capital. And I see a rapid improvement in that situation. So what would have been an unheard that now we are seeing even mid-cap companies raising 2,000 crore, 3,000 crore capital from the market. And it's quite a big deal. If you see 5-7 years ago, that was not possible. We have an SME exchange where very small companies are raising capital. We have almost every marquee name of private equity industry in the world present in India. We have a lot of private equity funds which are actually have all the investors as domestic investors. So access to capital is also changing, and it is the change is quite rapid. So that part is also being solved. And third is access to market. So on global front, India has achieved a lot in last 10-15 years. It has created a name for itself across industries. And in certain industries, we have gained a lot of scale and a dominant position globally. That is helping. That also has always have a rub-off effect in other industries. So that's becoming a little bit easier with technology, etc. Even on domestic part, now we see a lot of ease in terms of market access. 10 years ago, one of the best moat that used to be called for large companies was access to market. Distribution is strength, because nobody can beat it. It's too expensive to create that amount of or that quantum of distribution in India. With digital, online, internet, etc., that kind of becoming less expensive, much more easier, and it's making easy for companies to access customer, access distribution, etc. So this process is slow. I am not saying this process is very fast or as fast as one should desire, but it is happening. And in a growing economy, when per capita income grows, new business opportunity comes, people are able to raise more capital, they scale up, and hence you create wealth in a small cap space. So I think from that perspective, a small cap space for next 8 to 10 years is going to be very, very exciting phase in India. Now coming to the second part of the question, why this time is right? Well, no time is right, no time is wrong in our opinion. But given that market has fallen and small caps have fallen more, and generally small cap investing is also to do with confidence and not just fundamental. So when confidence goes down, generally small caps fall more, they get more burned down. So from that perspective, it's a good time to look at it, at least this space. One should not leave it completely neglected or avoided. However, I would add two caveats.
Let me just come in there and and also. No, I'm going to let you complete that point, but also just to sort of butt in there and ask if there are any particular sectors or strategy with which you're looking at, pockets within the small cap space. I mean, there must be some opportunities that you see. So also to get your view on that.
Okay, so just to complete the first part, two caveats there. One, small cap space is really long-term journey. So in my opinion, you need 5 to 7 year time horizon for investors to come and make reasonable amount of return. And second is it's very volatile space. So you should be ready for volatility. If you cannot stomach that volatility, maybe this is not a space for you. So now coming to your second question is, what are the things that we are finding exciting? So generally small cap is very bottom up approach for us. We look for businesses which are scalable, which have a clear right to win. We don't want to buy just because the opportunity size is large. We look for capabilities. We look for a demonstrated track record of companies creating a right to win for themselves. Other than what we look for in every company, like good balance sheet, good ROC, cash flow, etc. So we are seeing good opportunities in chemical space, some industrials because prices have come down, certain financials. So those are generally areas where we find it quite attractive.